single entry and incomplete records, and in this video we are going to be looking at the statement of affairs. So we have the accounts, that help in preparing financial statements. Financial statements, we mainly mean the statement of profit or loss and then the balance sheet, using incomplete records. Using incomplete records. Yeah. So what are those accounts that we use? The first one is the statement of affairs. Then the second one is the cash book. Then we have the control accounts, where we have the debtors control account and then the creditors control account. Then we have the expenses accounts. Expenses accounts, and then sometimes trial balance. Yeah, but they never, like, this is not necessary most of the times, but these accounts are so important when we are preparing financial statements using incomplete records. Yeah, so in this video we are going to start with the statement of affairs. So statement of affairs, this is a statement that is used to determine the capital of the business, and most of the times it is opening capital, but it can also be closing capital or closing capital. So what's the formatting of the statement of affairs? We usually have assets. Let's assume we are determining the opening capital. So we have assets. Assets can be things like closing inventory, receivables, land, furniture, motor vehicle, prepaid expenses. Like that. So you get the total assets. Assets at the beginning of the period, since we are determining the opening capital, you get the total assets. Then you less liabilities. You less liabilities, whereby we have things like payables. We have accrued expenses. Mainly those ones. We can also have loans. So you get the total, this this minus this. Total assets minus the total liabilities. And what you get is the opening capital, or the capital of the business. Like that. So that is the formatting of the statement of affairs. Yeah, when we are having our examples, we shall look at it, or we can actually have it right here. So this is the question. BNC maintains his books of accounts under single entry, and he has provided the following list of balances at June 30th, 2023. So this is the cash book. Then particulars of the assets and liabilities were as follows. So we have for 30th June 2022, then 30th June 2023. These are the opening ones, these are the closing ones. So in this question, then we have the additional information here, and we are required to prepare the income statement and then the balance sheet. But in this question, we were not given the capital, the opening capital. So we can use this example to determine the opening capital. So statement of affairs. We have the assets. So we go back to our question. The particulars, the assets and liabilities were as follows. These were the assets at the beginning, then these were the ones at the end. So we are using these ones at the beginning. So we get the assets, we identify all the assets. Inventory is an asset, receivables is an asset, this is a liability, this is an asset, this is a liability, this is an asset, and this is also an asset. So you get all the assets minus the liabilities. So we get inventory, which is 374, trade receivables, which is 240. We have bills receivables, which is 80,000. We have furniture, which is 12,000. And then we have equipment, which is 240. So we add and get the total assets. So 374 plus 240 plus 80,000 plus 12,000 plus 240. What you get is 94600. That is the total assets. Then we less liabilities. And according to the question, we only had two liabilities, that is bills payable and then trade payables. This is 180 and then this is 20,000. So trade payables is 180,000. Bills payable is 20,000. And the total liabilities is 200,000. So this minus that, what we get is the opening capital. This minus that, what we get is 746,000. So that is how we prepare the statement of affairs. Yeah, thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.